Hi, this is Daniela Cambone, and welcome back to StansberryInvestor.com. Last year, when most investors were watching their stocks plummet, one Wall Street legend had an unfair advantage that was identifying winning stocks with massive upside, like Riot Blockchain before it shot up 10,000%, Digital Turbine before it shot up 789%, and Overstock before it shot up over 1,000%. This power gauge comes from the legendary Mark Chaikin. And right now you can get a free in-depth look at how his power gauge system works. A way to type in any of the 4,000 different tickers and see exactly where the stock is most likely to go next and in any type of market. Simply go to powergaugetrial.com for your free look. Again, that's powergaugetrial.com for your free look. All right, let's get to our segment today. Welcome back to StansberryInvestor.com. Well, my guest today has said in the past that if you focus too much on the daily price action of Bitcoin, you will miss its profound truth. Please welcome back to the show, Alex Tapscott. He is the managing director of digital assets over at Ninepoint Partners. He's also the author of Blockchain Revolution. And when I spoke to him last, he had just launched his Bitcoin fund on the Toronto Stock Exchange. Alex, always good to be with you. Welcome back.
Pleasure to be here.
So lots of ground to cover with you today. Since the last time we spoke, Canada had just launched the first Bitcoin ETF, and now the US also has an ETF. So I want to talk about that with you. But first and foremost, let's talk about the price action that we're seeing in Bitcoin. A lot of investors panicked at the recent November correction. But I'd like to bring up, in context, it was actually the smallest correction the crypto saw this year.
Yeah, perhaps a sign also that investors are expecting less volatility in the asset class as it matures. I think it's worth putting it all into context. I think the last time we spoke, Bitcoin was around $30,000. So since then, it has roughly doubled in value in less than a year's time. You compare that to every other asset class, and it's obviously outperformed. I think a lot of that has been driven by the macro backdrop. We have seen inflation go from not existing to being transitory to actually being something we're probably going to be living with for a very long time. And central banks are concerned that they've lost control of the monetary tools they'll need to rein that in. So that's a very favorable backdrop for these kinds of emergent store of value investments such as Bitcoin. You know, gold has held up okay during that period of time, but really I think on the margin, Bitcoin has attracted dollars from investors. And we're seeing that from our perspective as a manager in the space, but also just generally, anecdotally, and also the data. The fund flows are clearly indicating that Bitcoin is attracting capital given this kind of macro backdrop.
So Alex, is a Santa Claus rally that many were hoping for completely out of the question for Bitcoin before year end?
Well, the thing about Bitcoin is that you want to, buy low and, hold, but you also can buy high and hold also. I mean, Bitcoin is a few percent off of its all-time highs. Almost anybody who's ever bought Bitcoin, is in the money, so to speak. So, for us, we don't think you want to time the market. It's just something you want to own for the long term. Whether we have some kind of seasonal rally remains to be seen. I think other years have suggested that this period in November, December can be very good. But for us, it's all about taking a long-term view. We think Bitcoin is a core component of a well-diversified portfolio. We think it's emerging as a store of value investment. But we also think that it has a lot of growth potential that is still not totally known. And so in many respects, it represents both a store of value, but also an investment in the future growth of digital commerce and the digital economy.
Now, with the advent of the ETFs we've seen this year, Alex, were you one of those that was expecting the ETFs to propel prices to at least 100,000? Because that was the talk at the time.
Well, I think that the ETFs or the fund flows into listed vehicles have definitely helped the price of Bitcoin. I wouldn't say that I was relying on it for any sort of target price to be reached in any given period of time. I think on balance, it's just an example of the increasing breadth of investors who are looking at Bitcoin as an investment. Until this year, investors who wanted to own Bitcoin had to invest into the underlying asset itself or into over-the-counter traded private trust. In Canada, with the changes in the regulations, it became much easier to list first publicly listed trusts, but later ETFs. And if you look at the ETFs in Canada, including ours, we've attracted hundreds of millions, if not billions of dollars. So that kind of fund flows, along with other exchange traded products around the world, have certainly contributed to the price. But the reality is, Canada is a good, decent sized capital market, but the US is really the mother of all capital markets. And right now, a physical ETF has still not been approved in the US.
Okay, so let's talk about ETFs versus buying actual Bitcoin. I mean, many are asking, well, why would I do that? Why would I buy an ETF that's linked to futures when it's not even linked to the spot price?
Well, in my opinion, you shouldn't do that. The futures-based ETFs have all sorts of implied hidden costs. When you buy futures contracts, you need to roll them over periodically, and those periods create friction and cost, which can actually put a major drag on the performance. So if you look at the performance, even in the past few months of some of the futures-based ETFs in the United States, they've underperformed spot Bitcoin. That is not true of Canadian ETFs. And that's a very important thing for people to understand. Canadian Bitcoin and Ether ETFs are spot based. So our ETF has a mandate to hold at least at 95% of its NAV in Bitcoin at any point in time. In reality, it's closer to 99%. And so what that means is that when you buy into our ETF or one of the other Canadian Bitcoin ETFs, you are getting dollar for dollar spot Bitcoin exposure, which is ultimately what investors want.
So Alex, definitely you're making the case for Canadian ETFs over the US counterpart. Any other reasons why an investor would choose a Canadian ETF over the US one?
Well, other than the hidden costs, no, but that's a big difference, right? Would you rather pay 70 basis points for exposure to Bitcoin through a listed product, or would you rather pay, many percent of hidden costs and end up having a massive drag on your performance?
Okay, let me ask you this. Isn't it more complicated for a US investor to buy a Canadian ETF?
Well, any investor who's used to buying shares of a Canadian company will find the experience to be pretty seamless. Buying shares in Canadian companies can be very straightforward for US investors, but not everybody, not every platform supports it. So it's one of those things you'd have to see for yourself, depending on who you're using. Okay,
help me understand this. Why buy a Bitcoin ETF over just Bitcoin? Why would you choose that path?
I think that's the more important question. Like, in my opinion, the choice really should be between buying a Canadian spot Bitcoin ETF, such as the Ninepoint Bitcoin ETF, or just investing in Bitcoin directly. And honestly, I think it really depends on the kind of investor that you are. If you're someone who's used to investing through the public markets, who wants to hold Bitcoin in a retirement savings account, who's looking to hold for the long term and not worry about custodying or managing your security or your private keys, then buying the ETF is a very simple, safe, and efficient way to get Bitcoin exposure. I think the best analogy, honestly, is to gold. There are many people who buy gold and decide to custody it themselves. They hold it, in a safe in an undisclosed location or in their house, because they see it as a true hedge against, the world coming apart. They want to make sure that they have it in their possession. There are lots of other people who view it as a diversifier, as a store of value, and so are far more comfortable owning it in an ETF than owning the physical bars of gold themselves. That's basically the way it is with Bitcoin. You can certainly own and custody your own Bitcoin. You can hold it, in a hardware wallet, in a safe or some other secure location. Or you can just buy the ETF and pay a small fee to get the same kind of price exposure. It's really a matter of preference.
Yeah, I know. I see that comparison. It's just that Bitcoin doesn't have the physical component that gold has when you're talking, unallocated gold versus allocated gold.
Well, if you think about the vast majority of investors, if you wanted to hold $100,000 of gold, for example, you'd be physically a small sort of amount of gold. It's roughly the same size as a hardware wallet that would hold Bitcoin. Now, if you're looking to hold $1 billion of gold, obviously that's a different story. You'll need a much larger safe.
Yeah. Right. It might not physically be in your house. Maybe you have it offshore at a vault, but you still have physical possession. You could still touch it if you want. But so that was the point I was making with that Bitcoin just doesn't have that physical component if you're comparing it to an ETF. That's true. But if you want to custody it yourself, you're probably going to have some hard
some physical component, basically either a seed phrase, which is what allows you to create a private key, or a private key held on a hardware device. Either way, there's some physical thing. It could be a tiny little thing, but you're probably going to hold something physical regardless.
I got you. All right. Want to talk your thoughts on purely owning Bitcoin. Are you in anything else outside of Bitcoin?
I am, yeah, but I'm someone who spends a lot of their time in this asset class. So I feel like I have the time and the bandwidth to really become educated on different assets. That's my sort of opinion, or that's my perspective for a lot of people, which is that you want to do your own research and you want to understand what you're invested in. I think it's the story and why you should invest in Bitcoin is intuitive for a lot of investors, especially those who are used to investing in gold. But once you move into other crypto assets, you're investing for very different reasons. Bitcoin is money for the internet. It's a store of value. It's analogous to digital gold. It is a hard money asset. Other crypto assets don't have the same properties. They don't necessarily have a hard cap on the supply. They don't necessarily have the same kind of security through proof of work mining. In fact, many other crypto assets are more analogous to buying shares in emerging companies. It's like buying shares in the hot Silicon Valley startups, where they may have the potential to grow and to make a lot of money. But I think there's more risk inherent because there's lots of competition and they may not necessarily have the best model. So that's why I think it's important when you're looking at this to only start with what can be understood and what you're used to investing in.
Can you share the other cryptocurrencies that you personally like?
Well, this is not investment advice, but of course I have lots of Bitcoin exposure and also exposure to Ether. Ethereum is a project that is, grown significantly in size because it is a platform that supports a variety of different applications. I personally am very bullish on all the different kinds of applications that are being enabled by crypto. And so I think Ethereum is one of the ways I play it. I've got lots of other exposure to other assets, probably too many, frankly, to talk about on the show.
But you're fully diverse. You're diversified though.
Well, I wouldn't say that I'm equal weighted. You know what I mean?
Right.
For me, a core part of any portfolio is Bitcoin and always will be Bitcoin.
I got you. No, I hear you. I just asked the question because when I speak to Bitcoin maximalists, it's just Bitcoin. They don't see the purpose of being in anything else. So I just wanted to understand your thought process. So
yeah, I would not describe myself as any kind of maximalist. I'm surprised that people who got into Bitcoin early because it offers a way to move and store value outside of the banking system aren't supportive of some of the other innovations like decentralized finance, which are trying to take that model and expand it to other areas of the industry.
Wanted to just ask you something on regulation that came to mind here, Alex. Should we see regulation crackdown, tightening in the Bitcoin and cryptocurrency landscape? Would the ETFs be hit harder than just owning Bitcoin or Ethereum or whatever?
Well, let me start by saying I don't see any kind of imminent crackdown on Bitcoin and cryptocurrencies. It's worth keeping in perspective. Bitcoin today is worth over $1 trillion. That's more than the value of every Silicon Valley startup that's been founded since Bitcoin was invented combined. What regulators are worried about are too big to fail things having a massive impact on the economy. At this point in time, I view Bitcoin and crypto assets as too big to fail. So when something gets to that size, regulators have to work with the counterparts in the industry and manage it. They can't shut it down. They can't try to be draconian because that will have massive knock-on effects. So first off, my opinion is there is no imminent crackdown on Bitcoin coming. To answer your question directly though, I see if anything were to cause the price of Bitcoin to decline or to increase a lot, it should have the exact same impact on the ETFs as it would on the spot Bitcoin price. The two and I should say this, Canadian ETFs, because they hold spot. If there was to be some changes to how futures are regulated, then that could have an effect on the futures ETFs, but that's not where we operate our business.
Final question, Alex. We've seen what fears of new COVID variants have, done to risk assets like Bitcoin. So I guess for the investors watching, which I'm sure these news stories and cycles won't end this week. What's your advice to them? Because obviously we'll see fluctuations in the Bitcoin price. So how do you not panic?
Well, I would just simply say the best time to get exposure to Bitcoin, was 5 years ago, and the next best time is right now. And the reason I say that is because we take a long-term view on the price of Bitcoin and on this underlying technology. The Omicron variant or whatever new piece of news comes our way, might have an impact on every asset. Who knows? But for us, that doesn't change the long-term thesis that Bitcoin is emerging as a store of value, that it's going to become a greater part of investor portfolios, that it's money for the digital economy, which is becoming more and more important, and that over time, we think the value is going to increase significantly of this network, and that's going to affect the price, and that's going to be good for the ETFs.
I find that interesting. So you say this time is a prime opportunity to get in, and the last time that was 5 years ago?
All I'm saying is that, of course, it'd be better if we invested at $500 versus $50,000. But for me, we're still in the early innings of what this could become. I mean, we look at the value of Bitcoin, it's $1 trillion, which is large, I suppose, relative to companies, but tiny compared to other asset classes. The value of investable gold is $10 trillion. And my opinion is that Bitcoin will surpass gold in terms of its size and its relative importance in the economy and in investor portfolios. So we're still at the very, very beginning of this cycle.
So when you hear talk of $1 million Bitcoin, that doesn't sound crazy to you?
Well, it depends on, I think $1 million Bitcoin would get us to just shy of $500,000. Sorry, I should say if Bitcoin gets to the size of gold, we get to $500 billion or $500,000, excuse me. So I don't think that's unreasonable. $1 million would suggest that Bitcoin is doing what gold is doing and more. I think that's very reasonable at some point in the future. A lot of people would say that $1 million is conservative, and who knows, maybe at some point, if Bitcoin becomes one of the 2 or 3 major forms of money in the world, probably alongside the US dollar, which I don't think is going anywhere, and it represents, a big chunk of the global economy, which today is $100+ trillion, in the future could be much larger, then $1 million could prove conservative. Only time will tell. But for us, where we are today, we still think it's the early days.
Only time will tell. Alex Tapscott, always a pleasure. Thank you for coming on and answering all my questions. I had a lot, so thank you.
Yeah, well, we'll have to revisit this in a year and see how I did on a lot of these.
Absolutely. Oh, I'll be coming to find you.
Yes.
Thank you, Alex.
All right.
And thank you all for watching. We'll have much more for you, so be sure to stay tuned to StansberryInvestor.com. In the meantime, don't forget to sign up for premier access to content you can't get anywhere else at DanielaCambone.com. That's it from me. Thanks for watching.